Base versus quote. What movement means is basically why Euro USD moves the way it moves. You need to understand the strength versus the weakness logic. Let's talk about currency pairs and the number one pair that I trade, which is Euro USD and GBP USD. I don't do anything else. I don't look at 15 pairs and I'm trading anything at any moment in time. I don't do any of this at all, ever. I just trade these two pairs. Sometimes I tap into gold, but forget about gold before you withdraw $20,000 from the market. Then we'll talk about gold. There's just too much volatility, and trading is a double-edged sword. So if the volatility is against you, you will be breaching account after account, just slicing it through. Now, let's talk about currency pairs and why the charts are the way they are. What you have over here is TradingView. Forget about this. I know some people that are here are like, what is this application that you just opened? We will also talk about this in this day today. Okay. So trust me, everything after this session is everything that you need in order to move forward. That being said, I want you to understand that euro versus the US dollar is basically the first currency, which is euro, is the base, and the second currency, USD, is the quote. The simplest way to understand this is if euro USD goes up, then that means euro is stronger than the US dollar. If euro USD goes down, then that means the USD is stronger than the euro. Now, that doesn't mean that Europe is booming and America is collapsing. It doesn't mean political stuff. It just doesn't mean anything dramatic, to be honest. It just means one currency is dominating the other at that moment in time. And when the chart goes sideways, that means they are at the same strength. That means price is moving within the range, and we say that means both currencies are roughly equal in strength for now. That is called consolidation, chopped movement or range bound movement. That's why you hear so many terms about the same thing, and that's why trading feels like, whoa, like what is this dictionary that we're just opening right now? And we avoid all these areas because there's no clean direction. We aren't there when there's a choppy market. Now, this is important. The market moves when there's an imbalance in strength. It stops when the strength evens out. You'll hear this again when we talk about imbalances and liquidity, and everything is going to connect. But to just give you basically a brief scenario description of what I just talked about. If you see this market over here, you can see that overall it's moving from higher highs to higher lows, higher highs to higher lows, higher highs to higher lows. And this means the market is bullish. If we have higher highs, which is higher high, actually, let me do it text because my handwriting is ass. Let's say higher highs and higher lows. And then let's also say we have lower highs and lower lows. A bullish market consists of higher highs and higher lows, but a bearish market, so let's say B with an arrow up, B for an arrow up, and then bearish, which is arrow down, arrow down. If we have higher highs and higher lows being created, that means we are in a bullish market. If we have lower highs and lower lows being created, like here, that means we are in a bearish market. That is basically bullish and bearish, base versus quote, quote versus base, what you see on the charts, why you're seeing what you're seeing. At this point in time, you can look up over here and you can see euro versus US dollar and 1 hour, which means this is the 1 hour time frame, but we will also get into the time frames and what they mean. Over here is forex.com, which is basically the brokerage that shows us what is going on with the charts and basically the prices that they're giving us at that moment in time. That means if we have higher highs and higher lows, we have a bullish market. If we have lower highs, lower lows, we have a bearish market. Euro and the US dollar. When euro is stronger than the US dollar, you will see higher highs and higher lows. When the US dollar is stronger than the euro, you will see lower highs and lower lows. When they are both in the same strength, you will see ranging motion of price that basically stays in the same range from top to bottom and it just doesn't break through. But all of that will be completely eased out later on.